When you think of the word long-term investor, what's the first thing that comes to your mind? For me, it's somebody who invests in the stock market or individual stocks 5, 10, 20, 30 years from now. Now, there's a difference. Are you a passive long-term investor or an active long-term investor? I am an active long-term investor, which means is I pay attention to what's going on in the individual stocks that I buy or the broad indexes that I buy. So I pay attention to what the CEO says. I pay attention to the conference calls, what's going on in the political and geopolitical news, and I pay attention to the websites, to the investor relations sections of websites, pay attention to quarterly reviews and all the numbers, financial statements. I pay attention to everything. That's what an active long-term investor does. Now, it doesn't mean that you flinch every time a news or something comes about your stock or your company. It just means you pay attention to what's going on. So that way you can strategically buy more stock. Most people in America are passive investors. If you have a 401k, if you have some type of 403b, or you passively buy ETFs in your Roth IRA or your individual brokerage accounts, and you're not really paying attention to it, you're just buying stocks every 2 weeks, every month, or every week, that's a passive investor. An active investor is somebody that's paying attention to their stocks and everything, right? And that's what I was talking about earlier. That's me. You have to have the right fortitude, and you cannot be emotional when it comes to long-term investing if you're trying to be an active long-term investor. Because if you pay attention to the news, right, and you see what's going on, the tweets, the different posts, you may flinch and want to sell out your stocks. And you cannot be like that. You cannot have any emotion whatsoever. You're paying attention to the numbers only, just the numbers. You're paying attention to what the CEO says. You're paying attention to what the customer says, what the quarterly number says. But you cannot get crazy and want to sell your stocks because of a political event or some type of tweet. That's what being an active investor is all about, an active long-term investor. You have to have that right fortitude to not flinch when the stock market goes down. If anything, if you're an active long-term investor, you're paying attention to your stock and you see the price go down, you're like, damn, I can get these stocks at a cheaper price. That's what you really want to do, is buy the stock at a cheaper price and buy it and keep it for the long term. When you're a passive investor, there's nothing wrong with that. What happens with a passive investor, they don't pay attention to anything. They just buy the stock and just watch it grow 8 to 10% a year, maybe 11% a year. Active investors are looking for a little bit more return on their money. So they're looking for maybe 13 to 15%, maybe even 20% sometimes. And yes, that's very difficult to try to get 20 to 25% a year on stocks. That's like beating at the S&P 500 by two times. And that's difficult, but it can be done. Now, could it be done on a consistent basis? Probably not. But if you're active, at least you're looking for valuable stocks that are undervalued, such as Nike right now. Nike right now is 40 to 50% off its discount value. The way it was over $100 before. It was over $200 at a time, right? And a lot of people are giving up on Nike. Every day it goes down, the stock goes down by 1%, 2%, and right now it's sitting at $40.50, right? For one stock, but it also pays a dividend. And Nike has been like thrown to the wayside. A lot of people has given up. They say competition is creeping up. Nobody's buying Jordans. They're not coming up with new styles. But this has happened in history before with Nike. This is not the only time that competition has peeked its head up against Nike. When back in the day, we're talking about Reebok, Fila, Saucony's, everything that came out back in the day. And guess who's still standing today? Nike. Nike is in charge of the Olympics uniforms, the branding, the commercials. They're still signing NBA artists. So, I mean, Nike is not going anywhere. If anything, they're going to have a turnaround story. So that's what being an active long-term investor is about. It's about looking for gems in the market. If you're looking for gems in the market, stay tuned to the end of the video. I'm going to give you 3 stocks that can make you a millionaire if you buy a lot of them, if you keep them for a long term. The active long-term investor also has cash on the side waiting to buy the dip, right? So that's why you have to take care of yourself, right? Emergency funds, you pay off your bills, but you also have to have some savings so you can buy stocks on the dip. That's what being active long-term investor is about. You're looking for little diamonds in the rough. You're looking for undervalued stocks. You're looking for great stocks. And if they come on sale, you want to buy some. Even if you buy a share, even if you buy $50 worth, you want to buy great long-term stocks that has great businesses that you did your research on. You want to buy when they go on a dip. So being an active long-term investor, you have to have some cash on the side. Not a lot, maybe like 1%, 2%. It depends on the stock market. When the stock market is at its all-time high, you might want to have 5%. When the stock market is down like 10, 20%, or we're in a bear market, you don't want to have any cash. You want to try to dump everything in as as much as possible when there's a bear market. But when the stock market is at all-time high, make sure that you have dry powder so you can be an active long-term investor and buy these stocks on the dip. If you're a passive investor and you see that the stock market went down, but you didn't really pay attention to it, but all of a sudden you look on your phone, your social media, and it says the stock market went down 10, 20%. You also want to gather some cash up. Get some cash ready and go ahead and buy some of those ETFs or index funds that you have been buying in your Roth IRA or in your brokerage account for a long time, because now you can get those on sale as well. It's not just about being or buying individual stocks. You can also buy some of the index funds and ETFs that have been put down in the bear market. And now you have cash. Although you're a passive investor, you saw the stock market's going down and you got an extra $1,000 or $500. You know what? I'm going to buy these stocks. I'm going to buy these individual or these index funds because now we're in a bear market. So take advantage of that. You could be a passive investor taking advantage of the stock market, or you can be an active investor taking advantage of the stock market when they're in a bear market. Buy those stocks and buy the dip for long term. When you're an active long-term investor, you also want to pay attention to the themes of the market. Every bull market has a theme. And right now we're in AI theme. Before it was the metaverse. I know you remember that back in 2021, 2022, the NFTs and the metaverse, that was the theme. It was all about tech. Everybody was trying to be a tech company. And now everybody's trying to be an AI company. And then after this, it's going to be a space or orbital AI. That's what we're going to call it. Or some type of physical AI. And it's going to be a theme of the market. Before it was the oil market back in the 70s and 80s. It was all about energy. And before that, then after that, it was about technology and all the websites and the internet. And that was a boom. And that was a bust. So there's always a theme. Even back in the day, back in the early 19th centuries, it was about railroads. Then it was about oil. Then it was about steel. There's always a theme to the market. So pay attention to the themes of the market. And right now, we're in an AI theme. After this, it's going to be a space or some type of orbital AI, data centers in the space, or physical AI when we're talking about robotics or any type of manufacturer warehouse robots that can take care or take over some of the Amazon warehouses and maybe fire people that are not capable of working 24/7 like these robots. Now, Wall Street do play these games. They do try to spook you out of your stocks. Like, let's say you're an individual, you have 500 Meta shares or 500 Apple shares. Somebody out there, they know these things. They can read our stock positions. They know everything. And sometimes they try to spook you out of your stock. They try to bring the stock all the way down. So that way, if you're paying attention to your stock, you're like, damn, my stock is going down 10%. But if you have 500 Apple stocks, who cares if Apple went down 10%? That just means you got a great stock at a discount. Do not get spooked out by these guys. They're going to try to spook you out so you can sell your positions. And when you sell your positions, they're going to buy your positions. I don't think you realize that the stock market is nothing but a market. That's it. People buy and sell. When you sell your stock, somebody's out there trying to get it at that price. So if you keep selling your stock, trust me, the Wall Street guys, those big investors, those big brokerage accounts or big investment firms, they want those stocks as well. And they're waiting for you to sell your stocks. They can't wait. So they throw out little news here and there. They may throw out little downgrades. They'll say, hey, we're going to downgrade today. We're going to downgrade Apple today by 10%. And guess what? You're going to panic and then you're going to sell your stock. No, do not fall for that, especially when you're a long-term investor. If you got great stocks like Apple, Microsoft, man, you get 10% discount, you better put something on it. You better put a little bit on it. Buy it. Buy some more. But do not panic and sell out of your stock because that's what they want. And that's what they're going to do if you panic and sell your stock. Remember, to be an active long-term investor does not mean you need a lot of money to invest. You can still be an active long-term investor, even with $25 a week, $25 a month, $50 a month, so forth and so on. Active investor just means you're paying attention to your investments. You're not being passive. You're watching the news. You're paying attention to the CEOs. You're just doing a little bit more homework than the average passive investor. So if you only got $50 to invest and you want to be an active investor, you can do that. Pay attention to what's going on. Keep investing that $50 and be consistent, be disciplined, and do not give up. And if you see dips, you put in $100. If you see stocks going all the way down, you put in $200. Especially if you did your research and you're an active long-term investor and you have great stocks in your portfolio, it does not matter how much money you have to invest for long-term. So the question, should you be a passive long-term investor or an active long-term investor? Now, it's up to you, but a passive investor, you do not want to do no homework. You don't want to pay attention to politics and the news and the everyday grind of the stock market. Just be a passive investor. Buy those index funds. You'll get back 10 to 15% a year on those index funds. If you want to be a long-term or an active long-term investor and you're looking for a little bit more, maybe like 18% to 20%, or even a consistent 15%, being an active long-term investor is the best way to go. But you got to do your homework. You got to use ChatGPT. You got to be on CNBC. You got to read Bloomberg. You got to pay attention to the news. You may have to look at some stupid tweets and some posts every now and then to see what's going on when it comes to geopolitical news or the oil or whatever. You have to pay attention to prices. That way you can take advantage of the dips and put more cash into those long-term investments that you have. It's kind of up to you. You want to do homework, be the long-term active investor, active long-term investor. If you don't want to do the homework, just be a passive long-term investor. If you gain any knowledge from this video, if you like the video, hit the thumbs up, subscribe to the channel, and then comment. Which one are you? Are you the active long-term investor or are you just a passive investor? Either one works for you, and that's fine. In the meantime, stay focused on your money, stay focused on your bread and your mental health, man. And keep it Econ 100. You already know.